focus on a big deal that was announced earlier. That was with regard to IMFA going ahead and buying Tata Steel's ferrochrome unit. To help us out with a quick analysis on that, in just a while from now, we'll have Parthiv Jhonsa who will be joining in and in fact giving us his view. In fact, let's get Parthiv Jhonsa and get his view with regard to the deal itself. Hi Parthiv, good morning, good to see you win. Tell us, what's your view on the deal, how positive it is for IMFA, and your view on the stock?
Hi Nigel, how are you?
All well, Parthiv. Initial take?
It's quite positive. Really excited because eventually, IMFA is taking organic plus inorganic from 284 to 384, and then eventually this 150 from the acquisition will be added, taking them, basically catapulting them to being the 6th largest globally and the only Indian player who is, in the top 6 or 7. So the deal is it's really constructive, taking or practically doubling down the capacity in next maybe 6 to 8 months kind of a time frame when even their greenfield facility of 1 lakh ton comes on stream.
Okay, and your target price earlier was around 1,510. Yes. You're holding on to that, or you're waiting to hear in from Mr. Panda to see whether you want to revise that or not?
No, we'll definitely revise it. We'll revise it, post tomorrow's call. Right now, I'm holding it till 1,510. That's a substantial upside, even considering the current CMP. But definitely, this deal gives a lot of headroom to grow as far as your capacity and as far as your numbers are concerned.
Right. I don't think you'll have to wait for tomorrow's call, because on the call right now is Mr. Panda. So maybe you'll have to, revise that after this conversation itself. Mr. Panda, congratulations. Nigel.
Yeah, well, Mr. Panda, congratulations. This time, Mangalam and me don't have to, tickle you whether or not you're going to do it or not. The big deal has been announced. The marriage has been announced between Tata Steel as well as IMFA. And it's going to be taking you all to a different scale. But we need to understand a few points. So congratulations on this inorganic growth.
Thank you very much, Nigel, and to Mangalam as well. Thank you.
Give us a few details. What is the net working capital that will have to be added to the cost of acquisition of around 610 crores? And also, what is the cost to effectively ramp up this acquired 1.5 lakh tons?
So, Nigel, as you know, what we have announced is the acquisition of the unit at Kalinganagar, which is operated by Tata Steel. And a lot of strategic synergies there because it is literally, I think, 500 meters away from our greenfield project. But getting to the specifics of the deal, the base consideration is 610 crores. There is a GST component to it being an asset transfer, but we will get input tax credit for that. And in terms of net working capital, while it is something that will be worked out on the last day, on the day of the deal closure, but we expect that to be around 50 odd crores. So in that range. And the other question you asked in terms of capex, as you know, there are 4 furnaces adding up to 66 MVA, which is operational, and a 33 MVA furnace, which is under construction. So as far as bringing that to commissioning stage is concerned, we expect it to be around another 50 crores. But I must mention here that we have done a due diligence, albeit a very thorough one. So it is only when we are in control of the plant that we will actually dive deeper into the details. But we are fairly confident that the outlay will be in the range of 50 crores.
All right. So, put everything together, 610, add another 100, 140 crores approximately. It will still be around 750 crores that you'll be spending for around 1.5 lakh ton capacity, which effectively, that will be lower than what you did organically itself. I think you did close to 900 crores. So it seems this inorganic deal seems to be good. But the crucial factor is going to be on chrome ore, because chrome ore globally itself is in short supply. So to run this unit, how much of the chrome ore will you be getting from captive sources, and how much will you have to buy from outside? And I've been noticing, in the last year or so as well, you mined a higher proportion of chrome ore. So you were bracing yourself for capacity expansion. Please go ahead.
So just to put any speculation to rest, we will be meeting all the chrome ore requirement for our current capacity plus greenfield plus acquisition entirely from our captive mines. We are not looking at buying any ore from the market. And as you said, for the last year and a half or so, we have been carrying a little bit of extra chrome ore, but that's because we were gradually stepping up the ore raising. As you know, we have gone from 6 lakh tons to crossing 7 lakh tons in FY25. And in FY26, we are targeting about 8.5 lakh tons of ore. So we do have about, I don't know the exact number, but we do have about 4.5 lakh tons of ore in stock, as well as some low-grade ore which we can use for blending. So all in all, when we look to scale up our output, our steady-state production has been about 260,000 tons, give or take a little bit. In FY27, because we are, we will be ramping up both the acquisition as well as the greenfield. So we are targeting about 400,000 tons of production in FY27, and which will further go up to about 475,000 tons in FY28. Although there could potentially be a slight upward bias to that, depending on how fast we are able to ramp up our ore raising.
You know, Mr. Panda, congratulations on this deal. I may not understand the specific modalities of where you get more from and what you do in terms of capex, etc. and stuff. But as a true blue Marwadi, the one thing that I want to know, 650 crores is what you are investing in increasing your capacity. What kind of incremental EBITDA do you get from this? FY25, your EBITDA was close to around 530 odd crores. Once your capacity doubles, will your EBITDA double or will it move faster than that because of the synergies that you will get here?
So, Mangalam, that's a very interesting question. So there are two things. I mean, EBITDA is obviously a function of the selling price as well as the costing. Now, selling price, as you know, we don't really look beyond a couple of quarters. But having said that, the market dynamics are such. South African ferrochrome production is sort of winding down at the moment in that tussle for better electricity rates and all that. So, net, it is winding down. And that is being compensated to some extent with Chinese output, which is higher cost than us for sure. So that being said, there is an element of cost savings here as well. Because keep in mind that Kalinganagar is logistically far more attractive than our Theruvali unit, for example, where we have a noticeable, both inbound and outbound logistics cost. And while in the near future we are not looking at sort of reducing capacity at Theruvali, but as we ramp up output at Kalinganagar, both in terms of the acquired unit, we do have the capability and this to add yet another furnace in our greenfield site as well. To that extent, when we start shifting some tonnage towards from Theruvali towards Kalinganagar, there will be further cost savings. But for the moment, you are going to see a significant volume jump. And as far as prices are concerned, you are seeing, prices have moved up significantly to about 1,15,000 to 1,18,000 rupees a ton, and around between 102 to 105 cents internationally. So that is in Q3 itself, you will see ongoing quarter itself, you will see a noticeable jump, which we couldn't quite get in Q2 because, as you know, a lot of our tonnage is booked on a quarterly basis, and even some of the other tonnage which is booked on a monthly basis. You really started to see the price move up in the in the month of September. But as far as the ongoing quarter is concerned, we are seeing both a higher benchmark price as well as higher spot prices. So that should lead to definitely better numbers. And for the in the near future, we are seeing that trend continue.
Yeah, I've seen in the past, you've normally done a rough EBITDA per ton of around 20,000 rupees. So if I put it mathematically, by FY28, your EBITDA, going by the current dynamics, should be approximately 1,000 crores. Is that doable? Things could fluctuate, but going by the ferrochrome, ramp up of production and the shortage of chrome ore, 1,000 crores of EBITDA looks possible by FY28?
So, without committing to that number, I would say yes. The reason, and let me be clear, I'm not, as you mentioned, our steady state EBITDA is probably in the range of about 18 to 20,000. But there are peaks and there are troughs, because in the recent past, you have seen the lowest is about 450 to 500. And not so long ago, we were at about 800. So there are peaks and troughs. But if you take a 18 to 20,000 rupees per ton EBITDA, I think that is doable, unless there are any surprises in terms of commodities or whatever. But I'm not the expert on that.
No. But would there be any structural advantage beyond this 18 to 20,000 which you've been getting, irrespective of the cycles, on holding scales and obviously having your own chrome ore? Can this 20,000 structurally improve to say 21, 22,000? And taking away the cyclicalities out here. That's what we're trying to understand.
See, structurally, there will be some advantage when we, because the capacity is, I mean, if you look at the weighted average EBITDA cost, the more we produce, towards the chrome ore, closer to the chrome ore mines, the better our margins will be. So, but that will take a few, 2-3 years to realize. So structurally, yes, we do anticipate some improvement in there, but, that's not going to be immediate. Okay. But as I said, I mean, there is some advantage of scale as well.
Got it. Got it. All right, Mr. Panda, so you have given us a preview. We have managed to give the street the trailer. The analyst call tomorrow, maybe they get further details. But as of now, second half of the year, profitability is looking better. Your aspiration is maybe going towards 1,000 crores of EBITDA, not a guidance, but an aspiration out there. And there are synergy benefits that will play out. Thanks a lot for joining in. Parthiv?
A doable aspiration.
Doable aspiration. Got it. All right. And any equity raising plans you have?
Nothing at the moment. As you
Everything will be internal accruals?
Internal accruals. We do have some undrawn term loans for our expansion. But depending upon how the markets play out, we have the flexibility to draw down on that term loan if required.
Okay.
But, we will evaluate that.
All right. Parthiv, very quickly, call on the stock now that you've had a few more details. If you want to tweak things.
Nigel, again, as Sir said that there will be strategic advantages coming in 27-28. I genuinely feel that achieving an EBITDA of over 20,000 is possible in this story. So at whatever the Sir has given a guidance at say 475,000 tons kind of a production number, and even if you just do a very simple back of the envelope calculation, it gives you a rough EBITDA of close to about 1,050 crores kind of a number. But leaving the cyclicality aside, if you see a long-term quarterly average, post 21-22 also, on a quarterly basis, they have done 22,000 kind of an EBITDA. So I'll stick to that 22-23,000 EBITDA per ton.
Take that point. Thank you so much, Parthiv and Mr. Panda, for joining us, detailing all the modalities of this deal and, laying it bare for the shareholders out there. That's about Indian Metals. Currently seeing a wee bit of profit booking, but remember the stock obviously has seen a rally of over 100% in the last 6 months. On the back of this deal, the stock sees some profit taking. We take